Welcome into the Crystal Creek Homes podcast. I am your host, Jason Thomsen with Bridge Advisory. And as always, we are joined by Justin Bobier, founder of Crystal Creek Homes, and Koby Contenti, dealing representative with Rethink and Diversify Securities. Today's episode is slightly different. If you've joined us for episode 1 and episode 2, you'll note that we've never really had visuals before. So today we are mixing it up just a little bit. We are going to be discussing the mutual fund trust at a little bit more detail. I know we introduced it in episode 1, but we're going to go into more detail here today. And because it is an investment vehicle, there's some detail there. We want to make sure that we have some visuals that help support what we're going to be talking about. But that being said, we don't want to just do a presentation. We do want to have a full conversation about this. So it's still going to be the podcast that you all have become accustomed to. So before we get into it, Justin, do you want to say hi, introduce yourself again, and then we'll do the same with Koby?
Sure. I'm Justin Bobier. I'm the founder and current owner of Crystal Creek Homes. The company started back in 2004 with humble beginnings, and we've certainly been fortunate to rise with the market and certainly expand our offerings across Alberta, and excited to be on the podcast today.
Awesome. Thanks so much. And Koby, why don't you chime in, introduce yourself, and tell us how you fit in?
Absolutely. My name is Koby Contenti, and I'm a dealing rep with Rethink and Diversify Securities. They're an exempt market dealer that offers a suite of investment products in the private marketplace, similar to Crystal Creek Homes. And yeah, I kind of fit in and I sell Crystal Creek Homes and amongst other things. So that's how I fit in.
That's awesome. Thank you both so much for joining us again today. We're excited to talk about the mutual fund trust. Now, this is something that is obviously a really important part of the growth of Crystal Creek. It's an evolution of the business in a lot of ways. This is something that's relatively new, although it has been around for a few years now, so it's not brand new anymore. But Justin, before we get into the details of it, why don't we talk just a little bit about the reasons behind the creation of the mutual fund trust? I know on episode 1, we talked about how your investors that you were working with had an interest in using their RSPs and TFSAs to be able to invest. That's obviously a big part of it, but it has also become part of the future growth vision for the company over the last number of years. And we're really excited about where this investment vehicle is taking the company and also what it offers to investors. So do you want to just tell us a little bit about the background of the mutual fund trust, where it came from and where you see it going?
Sure. You know what? Thanks for that, Jason. You're correct. Early beginnings, as we've been raising money and working with investors for well over 15 years. And, in that time period, often people would say, well, is this RSP or TFSA eligible? Can I use registered funds to invest into Crystal Creek Homes or into one of your limited partnerships? And that was never available to us. And of course, I build homes for a living, and so not really understanding the financial world of how that would even be possible. The answer was always no. And so at the time, we were presented with an option of considering opening up our own mutual fund trust, and the idea that it would be eligible for registered investments. And so as we kind of took a look at the template, that was really the initial kind of inspiration, was to say, for those investors that are currently with Crystal Creek, this would give them an option of using their registered funds that would still invest into our projects. And so that was the early beginnings of it. It certainly morphed quite a bit from there, but that was the original inspiration as to why we wanted to create a mutual fund trust for ourselves.
That's tremendous. And now that you have this investment vehicle, you're raising capital, we've got investors right across the country, Canadian qualified investors that are investing into this fund, and it's giving you an opportunity to grow the company even further. It's also opened up your eyes to some of the potential that this fund offers, not just for you as a company, but also for investors. Why don't we talk a little bit about where you see this fitting into your company goals, the vision of what Crystal Creek will become over the next 10, 20 years based on this investment vehicle that you now have available?
Sure. Maybe I can even just take a step back a little bit, Jason, to say that, as we started the mutual fund trust and, as we got it up and going, and it was certainly took some work to get it up and getting a little bit of traction, we started to realize that we have an RSP matching program even within our company. And, why would we invest into a bank mutual fund or something like that with our employees rather than actually make use of our own trust? And so the inspiration sort of started from there to say that as our team members, we always encourage ownership thinking. And this is actually a way that they can physically become invested within their own company. And so we created a RSP matching program of 2-to-1 for our employees once they've been with the company for a certain period of time. And that has really created ownership thinking where they are, putting in their own funds. And at the same time, then Crystal Creek has a matching program. And what it did was it started to change the way we thought about the fund. We really started to think about it as this is really the future of our company. It's the future of our employees and our team members. It's really a retirement vehicle. And so as such, the investments that we started to take a look at started to change over time and starting to, we're going to talk a little bit about how we've started to introduce some passive income that will be, far reaching past the life of Crystal Creek Homes on into the future. But really, as that started to change and we really started to look at it from an investor lens to say, well, Crystal Creek requires money in order to finance its projects. And at the same time, investors require something that is consistent, something that is predictable, and something that they can rely on. And it was really all of those factors that started to shape the fund as to where it sits today.
That's tremendous. And yeah, it is such a big part of the company now, both internally, but also externally. A lot of your business partners are now participating alongside you in the projects that they're operating as well. And it really is becoming a very community oriented initiative that obviously that spans far beyond the borders of Calgary and Edmonton as well, with our partnerships with Rethink and Diversify and the other exempt market dealers that we're working with, where we have investors now participating right across the country. So it has grown substantially over time, and it definitely is an exciting vehicle. We are going to get into a little more detail. Before we do that, we want to cover the legal disclaimer of this particular offering, being that this is an offering only for Canadian residents, for qualified Canadian investors, and that it is offered through an offering memorandum. Now, we're going to talk about this offering throughout the podcast here today. This isn't us making or soliciting investments right now. This is for information purposes only. If it's something that you're interested in, that you would like to learn more about and learn whether or not this might be a fit for your personal situation, you can definitely reach out to Koby after the podcast. We'll put his contact information up at the end, and you can send him an email. He's happy to connect with you. Koby's registered in many of the provinces across Canada, and if necessary, we can refer you to another dealing representative as well in your local jurisdiction if you are tuning in from somewhere outside of our immediate neighborhood here. So the offering memorandum is the full legal disclosure. You'll receive that document before you make an investment decision if you choose to do that. If not, we're just going to be talking about it in general terms here today, and we'll leave it at that. So Crystal Creek obviously been around now for 20 plus years. You're into your 21st year here. You built out over 1,000 new homes for happy Albertan home buyers, total value of over $1 billion. Being able to partner with a company in the home building space with the track record that you have, the longevity that you've had, and the success that you've been able to demonstrate, I think this is a unique opportunity for a lot of investors. Now, Koby, you work with investors directly on a day-to-day basis. What is it about the opportunity to invest in home building and in real estate in particular that resonates so well with your clients?
Absolutely. I think the diversification in this fund is what sticks to a lot of my clients. Not only are they investing in one of the hottest real estate markets in Canada, which is the Alberta market, but they get to take the best of both worlds by getting a diversified portfolio that invests across both Calgary and Edmonton. And not only on the home building aspect too. the mutual fund trust has a stake in a multifamily rental unit, which I believe that you guys will be discussing a little bit later on. But there's also potential for some purpose-built rental down the road as well. And so it's well diversified. You're not stuck to just home building. You're not stuck in development, similar to some of the other companies that may only focus on one aspect of that real estate market. This tends to encompass quite a significant portion. And so it's well diversified, which tends to give investors quite a bit of ease.
That's tremendous. I also love that an investment sector that we don't typically have access to. There aren't a lot of home builders out there. There are a few publicly traded home builders, I guess, and you can invest in those stocks. But then you're subject to the fluctuations that we see in the public markets. I love that with a private investment like this, your investment's really determined and driven by the success of the company itself. We're not so worried about quarterly financials or anything like that. You just look at the long-term success of the projects, being able to execute on the business model and deliver returns consistently to investors. All right. So the mutual fund trust itself, as Koby just mentioned, this is a diversified pool. So it's investing into a variety of different projects, whether it's in construction, whether it's in purpose-built rental, like Koby mentioned, or whether it's in the ownership of an existing multifamily asset. We'll talk about all of those throughout the presentation here. But Justin, this was part of that pivot that you were talking about when you started working with this fund with your internal employees and stakeholders. This is one of those things where you looked at the existing mutual fund trust that was just investing into the home building projects, and you wanted to diversify it a little bit. This is a strategic decision to try and add a little bit of predictability, some of that consistent cash flow into the fund. You also made some changes into the type of unit class that the mutual fund trust was investing in. Now, prior to the mutual fund trust, all of your projects were standalone limited partnerships. And so each one was its own investment entity, and investors could come in and select to partner in one particular community in one phase of construction. And then when that phase was all wrapped up, they got their money back and they were able to select another one that might be available at that time. The mutual fund trust is a little different, but it was investing into those same partnerships at the beginning. And that created some challenges that you've now addressed. Do you want to talk us through sort of the evolution that occurred with the mutual fund trust and the partnerships that you were investing into?
Sure. With a number of our limited partnerships, when they first get started, most of them have a life of 3 to 4 years. And generally in year one or even into year two, those will experience losses. And that's because our revenue isn't calculated until we actually physically take possession of a home with a homeowner. And so, although it's good if you're looking for losses and write-offs, as years 3 and years 4 roll around, then those are recaptured. And, at the end of the day, investors generally do fairly well in those opportunities. However, for the mutual fund trust, it was difficult in terms of investing in various different projects and starting to incur those losses in years 1 and 2. And so we made a pivot and we created a new class of units that just pays a quarterly 14% return. And the mutual fund trust invests in that particular class so that it has quarterly income coming in on a consistent basis. And our projects are able to manage that fairly well. And can deal with that cash flow. For the mutual fund trust investor, it gives them predictability in what they're getting. There is a little bit of, leaving some upside on the table if that limited partnership does incredibly well and performs better than 14%. We're leaving that on the table, but I think that that's a great trade-off for that consistency and that predictability for our investors within the fund.
Yeah, I agree. I think it's so important that you did make that pivot because the mutual fund trust, especially in its first couple of years, all of the projects were brand new. And that first 2-year cycle of bringing in new projects, if they're all going through that same cycle at the same time, it really is fully exposed to those initial expense-heavy years. And it doesn't have the revenue to offset it. Whereas now that the fund is more mature, you can sprinkle in some of those projects from time to time. And that's something that you've done recently with the Aspen projects, for example. you've rolled in some of the conventional LP investments, which do have those upfront expenses, but then also have some upside potential on the profit sharing. Now, because you have that stable base of partnerships that are all paying out that fixed 14% return, you can add some of these potentially high performing LPs directly into the mutual fund trust and still give the mutual fund trust some upside potential by doing that. So, do you want to talk maybe about Aspen 5 and now Aspen 6 that are being rolled into the mutual fund trust and why you selected to go with the Class A partnership units on those projects rather than the Class F within the mutual fund trust?
Sure. I mean, generally speaking, I mean, there's no guarantees in life on anything.
Yeah.
However, we do have certain subdivisions that certainly outperform others in terms of their sales pace and their desirability. And so we're very fortunate to be in one community called Aspen here in Calgary. And in that particular community, we typically have sorry about that, a waiting list of people that want to purchase. It's a very affluent area, and it's been very predictable because we've been in that community for over 15 years now. And there's only a few phases left. And it's very, very hot real estate here in the city of Calgary. So knowing that on the mutual fund trust side, as trustees and part of the investment committee, recommending to purchase Class A units within that limited partnership just makes a lot of sense. It's an injection into the mutual fund trust. Many of our past investors all put up their hands and say, whenever Aspen comes up, I want in. I want Aspen. And so we took that and we said, we're going to make it exclusive to the mutual fund trust. And for the reasons being that the trust really supports us into our future vision. And so by sprinkling in some of those higher yielding opportunities, just goes to everybody's at the end of the day to their bottom line, and just makes sense as we build into the future of where the company and the fund is heading.
Yeah, that's tremendous. Yeah, it's so exciting to be able to have some of that upside potential, but still have the stability with the base of the portfolio. And this illustration here really does kind of show what that looks like. The 80% of the fund that is currently allocated to those Class F units just performs so consistently. It's generating 14%. It's receiving quarterly cash flow on all of the investment capital that's deployed into those unit classes. And then there's the small amount that's allocated into these other assets where about 10% of the fund is into those Class A units that have some of the upside, and another 10% is into the Giordano building, which we'll touch on towards the end of the presentation. But it's so nice to have that really strong, stable base, and then to be able to add some of that diversification in with some potential higher return.
Yeah, absolutely. And, I think it's a good mix as it is right now. I think into the future, you'll start to see the rental or the passive income side of the fund probably increase. And that just goes to stability and consistent returns.
Absolutely. So the three different asset classes, I guess, that we're investing into, they're all the same real estate class, but the subclasses within it, we have the new home building partnerships. And these are communities where Crystal Creek is actively building new homes. The investment that the mutual fund trust is making into those communities helps to fund the construction, the developer deposits that you need to actually secure the lots to begin with, and then just takes you through that building process to the point where you start generating revenue from the sale of those homes and the collection of deposits. So we've got a number of different communities. In Calgary, you're in, is it 11 communities?
I believe it's 11. I think by the end of 2025, it'll be down to 7 as a number of our great communities are coming to an end. So it's my job to be going out and finding new opportunities for our investors and for our team here at Crystal Creek.
That's great. And we do have a couple of new ones coming on this year as well that will replace some of those that are disappearing for us. We're very excited about those. We are going to go into project-specific conversations in future episodes, so we're not going to dive too deep into that here today. But the home building limited partnerships, they are just the bread and butter of what Crystal Creek does. This is what your home building business is all about, building new homes for happy home buyers, making sure that they're getting product that matches their needs at a price point that makes sense for the community. And you do this very consistently. As a production builder, you do deliver some very high quality homes, but it's really rinse and repeat, right? You're building the same plans over and over. You have a lot of predictability to your costs, to your revenues throughout the whole process. It's really just generally a matter of managing the sales process, right? To make sure that you can move through inventory at a reasonable timeline.
Yes, I mean, over the years, we have really defined our processes at Crystal Creek. And a lot of times people will see these beautiful, luxurious homes and automatically say, oh, they're a custom home builder. And actually, we're not a custom home builder. Our business plan is when we go into higher end luxury areas, we will have specific plans with specific options that are pre-priced out so that we know exactly what our costs are. And we're building those same models, although they may look differently with different elevations, so that we have predictability and knowing what we know. Although we certainly often get labeled as that custom luxury builder here in certain communities in Calgary. But what that has done for us really is made us more efficient. It's allowed us to understand exactly what our costs are. And when you go and you have hiccups on the very first time you've built a house in terms of, oh, we didn't realize this or that, we're able to refine that process. And so we refer ourselves to as a production estate builder in those luxury markets.
Yeah, that's tremendous. So some great examples. You build a variety of different product in different communities, different locations. We've got the University District where you're building luxury townhomes. Curry, these are the larger estate style homes. Belvedere, this is more of a mid-market. A lot of suited up and down homes, but really nice size. They're in Calgary. They're at about that $700,000 to $850,000 price point. And the same homes that you build in Edmonton are about $200,000 less than that. But again, these are consistent product that you're building in different markets at different price points for different builders. All of these partnerships function the same way, though, for the mutual fund trust, because you're investing into that same Class F unit, generating 14%, regardless of whether you're building luxury townhomes in the University District or mid-market homes in Belvedere.
Absolutely. And I think that, as our portfolio starts to expand in terms of what we're building and really taking a look at some of that product and converting it to purpose-built rental so that we can create that passive income, we still need to take down the land. We still need to build out the product. And so that's where our mutual fund trust really helps us in terms of being a capital partner to help finance that real estate. And then investors can then benefit long-term if it's carved out as a rental niche. If it's not, we just get those returns that are coming in. And then as that cash comes back into the fund, look to redeploy it into areas that we are consistently building and have that predictability.
Tremendous. There's a couple other projects in the Calgary area. You mentioned purpose-built rental. I know Tazza Park is one of the communities that you're eyeing up that opportunity. This is a brand new one that just came to fruition here in the last couple of months as you entered into contracts there, but one I know you're excited about. Do you want to touch on that in 30 seconds, and then we'll move on to the other types of partnerships?
Sure. Tazza Park is an incredible opportunity for Crystal Creek Homes. It's going to be on the Sutina lands here in Calgary. And so in conjunction, Sutina and a company called Canderel have formed a limited partnership that we will be leasing the land from and building on there. It's an incredible opportunity. And the reality is that going into a new opportunity can bring certain risks. And so one of those risks will be, what will the sales cycle look like? And so as a backup plan, we plan on carving out some of it as purpose-built rental if the need arises. And so good for us that we have a bit of an exit strategy, and we don't know what percentage that might look like, but we certainly anticipate some will be carved out as rental for the benefit of our fund and our investors, and as well for the benefit of the upfront de-risking the project, if you will, and creating that exit strategy.
And then Pine Creek Villas, this is a beautiful sort of 50 plus type of product, specifically targeting retirees in the Heritage Park area, which is down, or sorry, Heritage Point area on the south end of Calgary. And then you've also got a new project up in Fort Saskatchewan. Now, this is very similar to a lot of projects that you've had in the Edmonton area. But again, this is one where you see a strong opportunity for that purpose-built rental product. Fort Saskatchewan's a growing market, really close to some major employment centers, and really well poised to thrive in that rental environment as well.
Yeah, there's billions of dollars being invested in and around Fort Saskatchewan, which is just northwest of Edmonton. And in terms of that and being an employment center and a growing community, it absolutely lends itself to a fantastic rental opportunity. The Fort Saskatchewan area is really underutilized from a housing perspective. So we're looking at this opportunity as a long term of adding some rental to our mix on a yearly basis. And so this first one will be 17 homes, and we look to up that hopefully on a yearly basis for years to come. Again, where the mutual fund trust comes into play is we need the capital to go out, purchase the land, build those homes, and then essentially turn them into rental at a future state. So it becomes kind of this circular opportunity that will just continue to feed the fund and continue to feed our investors.
Absolutely. And it really does show the diversification, even on the home building partnership side. You're in a variety of different communities, building different types of product at different price points. There's a lot of diversification, even among just the home building partnerships. But the purpose-built rental partnership opportunity is also significant. We've touched on a few of the markets where you're looking to potentially execute this strategy. This is a new opportunity for Crystal Creek. And it's largely driven by the MLI Select program, which is being offered by CMHC, the Canadian Mortgage Housing Corporation. So this is a unique incentive program. It's some financing that is exclusively available to builders that are creating new rental product and specifically affordable rental product. So do you want to talk just briefly about the opportunity that you see here and your excitement level around it?
Sure. I mean, we all understand and realize that Canada needs more homes. Alberta needs more homes, specifically in certain locations. And CMHC has come out with a program called MLI Select, which allows us to go out and produce homes with a reduced interest rate and as well a higher loan to value. And the program essentially targets more multifamily, but we have been able to massage it so that it works on single family homes and will support the products that we're currently building. And such a tremendous desire for people to be renting in a single family home, especially when we take a look at basement suites that are very, very affordable. We know when we take a look at our markets and we look at what a one-bedroom apartment might be renting for, people can rent a two-bedroom basement suite for less than that. And it's really becoming a desirable alternative to renting an apartment. So we're able to take advantage of that under this program. The rate of return is fantastic. And, for investors that are looking for passive, consistent, long-term income with appreciation in what the houses will appreciate with over time, it's an excellent opportunity for our investors and our team members to participate in an opportunity like that.
Yeah, and that makes so much sense for the mutual fund trust to have that income plus the upside potential of appreciation over time. Giving both sides of the coin to the mutual fund trust, I think is a no-brainer in terms of its inclusion into your strategy.
Yeah, it really supports the vision of where the fund is going, that if we're not building houses or we don't have opportunities, there's still income coming in. So investors are going to prosper from that. We all know that real estate goes up in value over time. And, if we take a look at what's happened in the past 10 years, whether in the Edmonton market or Calgary, it's going to range from a 30 to 40% increase over that period of time. And so that just goes directly to our investors in the fund. And so I'm really excited about that particular opportunity within the fund and how that will support our vision going into the future.
Yeah, tremendous. And then the Giordano asset. This is another one that's a little bit of a different allocation. It's a multifamily asset. It already exists. This isn't new construction. And Crystal Creek Homes didn't build this product. This is one where you came in after it was already complete and were able to acquire it from bank foreclosure. So you got a pretty good deal on it on the acquisition, but it also adds that predictable, consistent cash flow to the fund with some upside potential as well. Do you want to maybe talk just briefly about the Giordano asset, how this kind of came to be, and what you're intending for it as part of the mutual fund allocation over the next 10 years or so?
Sure. This opportunity came to us and it was something that we had to act on very quickly. And we were able to do that with a small group of investors. And it certainly has gone up in value as the building was stabilized. What we realized as a company is that we had to self-manage this. We had to take this on internally because I would say the one thing that is really strong about Crystal Creek and our history is execution. And what we found is that rental rates market rates were not being achieved. People weren't being charged properly. The building wasn't being run efficiently. And so when we took that on, it really helped because we've got an incredible trade base that we can rely upon to ensure that these types of assets that we're looking at are certainly well built and well maintained. And essentially by utilizing our policies and procedures of execution on a rental style building like this has really helped us in terms of raising the bar as to where we are in the average of the industry in terms of what we're able to achieve. We've had pretty much close to 0% vacancy for a long time. We've seen the market rents in Calgary come down a little bit and soften. And so, we expect to see an adjustment in that this spring. But, again, an excellent asset to have within the mutual fund trust that is going to consistently produce a positive rate of return in terms of what that income potential is. And then as that building goes up in value, and we think of, although the building has gone up, in recent years, it's going to continue to do that year over year over year. And that again goes directly to our mutual fund trust investors. They get to participate in that. And so I think it's a win-win. It supports the long-term vision of that passive income. It also just gives us a stable, predictable ability to give a consistent quarterly return to our investors that are investing in the fund because we can count on that income coming in.
Yeah. And the process of learning to manage this building, taking on the tenant relationship and stuff like that, that obviously also gave you the confidence to move forward with the purpose-built rental strategy. Knowing that you have the team and the expertise and the processes now to manage tenants allows you to scale that out as we roll into this purpose-built rental aspect as well.
Well, a number of the investors within Crystal Creek are former Crystal Creek clients. And so they would be the first to tell you that at times they can be demanding and certainly can be a little bit higher maintenance than potentially some other business when they are talking about their clients. And so having to take on rental was actually a very easy transition for us. We didn't find it that difficult in terms of having our policies and procedures to ensure that our clients are happy following our process here at Crystal Creek. We really just took a little bit of that, massaged it for the rental client, and it was relatively easy actually to take that over. And so, I guess it would just be our experience in what we do for the past 20 years and the clients that we're used to dealing with that would be the first to agree with, I'm sure, with what I'm saying.
That's great. All right, so just a couple more pictures of the Giordano building. Obviously, beautiful, modern, new building that we're expecting to be a strong performer for a very long time. And then, Kobe, do you just want to maybe walk us through some of the main features of the mutual fund trust? Some of the stuff that you really do focus in on when you're talking to your potential investors about whether this is a good fit for them?
Absolutely. So the biggest thing is that this mutual fund trust targets a minimum 10% annualized return. A lot of people, when they come to me, they say, well, what's it going to produce me? Crystal Creek Homes has set a targeted 10% annualized return. And Justin, I actually wanted to ask you a question to speak on that. You introduced what's called a funding agreement between Crystal Creek Homes and your mutual fund trust, where Crystal Creek Homes is covering every expense that has to do with the mutual fund trust. Not only that, but you guys do not take a management fee from the trust, which is very, very different than a lot of other issuers and quite unique. I don't think I've ever seen that be done in the private marketplace. So maybe if you just want to touch on those two topics and explain why Crystal Creek did this and how it benefits you guys.
Well, I really, really am appreciative of our early investors who supported us, who came into the fund, where, I was speaking to them on an individual basis, and they came in, and there was a bit of a feeling like a bit of a failure when in those first couple of years we were experiencing those losses, which I knew would turn things around. But what we realized within the fund was that as the fund was growing slowly, the costs were exorbitant in terms of the fund value. And so, although the fund was performing, the investments that we were making were all paying off and starting to do well. The costs within the fund were just making it really difficult to be able to produce positive returns. And so, as Crystal Creek, we took on the idea of, what, we're going to cover the costs that are within the fund, and we're starting to see positive results now. And we're going to continue to cover those costs until those early investors that supported us have at least a 10% annualized return from the day that they put money in. And so we don't know how long that's going to take. And so I've made that commitment to all of our investors. And so when we talk about, legal costs or commissions or audit fees or professional fees, Crystal Creek covers all of that within the fund. And then the other thing that I've noticed with a lot of other funds, there's management fees, or, they've been set up as a profit center for someone, which is really not the reason that we set this fund up. We don't make any money from this fund. There's no management fees paid out. There's nothing that we're taking from the fund, because the fund is in essence supporting our core business, Crystal Creek Homes, of building homes, being able to commit to communities, being able to take on rental portfolios. And so we don't need to make money from the fund. It is supporting our core business. And so we don't charge any management fees within it. And by covering the costs, we believe, we're going to grow this fund, 10, 15, $5 million at a time, maybe at a chunk. But, we'd like to see the fund in that 20 to 30 to even $40 million into the future. And so the only way we're going to do that is by supporting our investors who are supporting us. And that's the reason that we are covering the cost until the fund is at a point where it can consistently perform and consistently have returns to our investors that they're pleased with and everybody can have a smile on their face about.
Awesome. Thanks, Justin. Some other key highlights of the fund is that you mentioned how it invests into Class F in those single purpose limited partnerships, which can provide predictable cash flow to the mutual fund trust, which then allows the mutual fund trust to go out and pay out investors a quarterly distribution. So you guys recently changed last year to target a 9% distribution, and those will be paid quarterly. And the mutual fund trust also offers a DRIP, which is a distribution reinvestment program. So for your investors, Justin, it allows those investors to say, you know what, I don't need the distribution personally, just allow it to reinvest itself, and then that can allow the investment to compound on a quarterly basis, which is fantastic. You mentioned how this is available to registered accounts. A lot of people like putting their RRSPs and TFSAs to work, but I think another thing too to mention is that there are some potential tax efficiencies on the cash investments too with this investment. Jason, maybe you want to speak on this a little bit more, but all of the distributions made in the fund are return of capital. Do you want to explain maybe what that means to an average investor looking to do a cash investment?
Yeah, absolutely. So if you invest into this fund, this vehicle, and let's say you invest $50,000, your distribution on an annualized basis is going to be 9%. So you're going to receive about $4,500 a year in distributions. Those distributions will grow slightly over time as the NAV of the fund grows as well. But for nice round numbers, let's say it's $4,500 a year. Those distributions are considered just a return of your investment capital. Because it's your investment capital that you're getting back, it's not new income, so you don't pay taxes on it. Instead, what happens, every one of those distributions just reduces your adjusted cost base. So the CRA will track that. You have a file or a form that you receive every year that will give you your statement of capital at risk and your adjusted cost base, the distributions that you've received and that sort of thing. But they are not taxable distributions. And at the exit, when you decide that you're done with the fund, you want to redeem your units and exit the position, Crystal Creek will pay you out at the current net asset value at that time. And you will pay capital gain on the difference between your sales price and your adjusted cost base. So capital gains are far more tax efficient than income. And as a result, we're sort of able to transform what would be an income stream into a capital gain instead. And that's significantly more tax efficient than just income distributions.
Yeah, thanks, Jason. A lot of people
Yeah.
do like this because if they have cash, they can put it to work. If they have registered funds, they can put it to work. And it's really consistent on those targeted distributions, and that targeted return really helps a lot of investors at peace with some of the downside risk that could come along with it.
Absolutely. And again, it is a minimum investment of only $10,000, so it's very accessible. Most people can come up with that over a period of time and then potentially reinvest again in the future as well. And the early redemption fee schedule is only for 3 years. So this isn't necessarily a super long-term locked-in 10-year type of investment. You're definitely welcome to invest for the long term and hold your investment for as long as you would like. But after 3 years of holding this investment, there are no early redemption fees. You can redeem at full net asset value. Tremendous. Okay, that is pretty much it for today. There is, as we mentioned at the beginning, an offering memorandum that fully explains all of the details of this investment. If it's something that you're interested in, definitely do reach out to Koby, and he can either put you in touch with a local dealing representative or help you directly himself, depending on where you're located. We appreciate you all joining us. This was our first official live stream of the podcast. So for our live attendees, thank you so much for joining in. If you have any questions, we'll take a few minutes here at the end of the podcast to take those. Feel free to write them into the chat if you have a few questions. Otherwise, we'll wrap it up here. We did run about 8 minutes, 9 minutes over time here today, but I think we covered some great content. I'm really happy with the discussion. Justin, do you have any final points that you would like to make about the mutual fund trust or its role in Crystal Creek or the opportunity for investors in partnering with you?
I would just say the costs that we're incurring by maintaining the fund today are done as a long-term vision. We see this fund really at the end of the day as something that is going to be for our retirement at Crystal Creek. We have a long-term inspiring goal within our team members of 5, 10, 15, which is invest 5% of your income. Crystal Creek will top that up with 10% of your annual salary. And within 15 years, you'll be able to replace your income. It's really given our team members ownership thinking as it relates to what they do in their every day-to-day job, to give them that realization that this matters for me personally. It's not just the company. And so I would just say that we really have a long-term vision at Crystal Creek as it relates to this fund, as to where it's going. And we're looking forward to participating alongside outside investors outside of the company who are going to continue to help us grow as a company in our core business, and we're going to help them flourish in return. So I really see it as a great partnership.
Wonderful. Thank you so much. We are very excited to be working with you as well at Bridge Advisory. I know Koby's very excited to be working with you at Rethink and Diversify. Crystal Creek is doing some incredible things, and the way that you've structured this fund, the way that you've managed the relationship with investors has been absolutely unique. We are so proud to work with you, Justin. Thank you so much for everything that you're doing. We will take a couple of minutes here and just see if any questions come in. But for those of you on the recording that are viewing this after the fact, thank you so much for tuning in. It's been a pleasure We will see you in 2 weeks.
Thank you.